everybody. Good morning. As we typically say, good morning. What's up? Today is Thursday, December 15th, winding down the end of the week. We are through the bulk of the economic data. We got a little bit of stuff here this morning at 8:30, quite literally a minute and a half ago. Some Empire State Manufacturing, core retail sales, and the unemployment numbers. So let's give this a little bit of a refresh, see what the market's thinking of all of them. All right, looks like Philly Fed wants to be the laggard here, not coming in quite yet. But so far, we can interpret some of the data. Core retail sales month over month came in negative instead of this positive expectation. Remember that this is a reflection of the Black Friday look there, and not great. So core retail sales being down, just an indication that the consumer isn't really. There's not a lot of spending going on, right? Not a lot of spending going on. What else? Empire State came in way worse than the expectation. Retail sales, so that was core versus the retail regular here, down 0.6 versus 0.2 expectation. Same idea. And then unemployment claims, this is a bullish beat, obviously, meaning that there are less unemployment claims, which is good for the labor market, which is not great for Jerome Powell and sort of what he's been outlining as the path forward. So interesting how this is continuing to unfold, but I suppose it does make sense based on what's going on here. And then there's the Philly Fed coming in at minus 13. Expectation was negative 10. Minus 13, minus 10. So we're through all the bulk of that. The market did move lower on that news slightly. That's why the title of today's video is that we still are getting some selling pressure here. And we'll get tomorrow at 9:45, when the market's open, of course, flash PMI. Just another something to be mindful of in the face of CPI from Tuesday, Fed from Wednesday yesterday. This probably won't be market moving. All right, so far, so good on the economic calendar. No big issues here. Let's take a look at next week just to start previewing what we've got on the docket. Nothing early on. Monday and Tuesday are blank. Then we'll be going into some consumer confidence. Final GDP quarter over quarter, that's important, right? And then core PCE, that we will be live for early next Friday, almost a week from now, to see what the numbers come in like. Remember that the PCE number is much more of what the Fed's paying attention to in their calculation of inflation. So really, really interesting to see how that continues to pan out there. So that's the economic data and the calendar in front of us. What do we see from a stock-specific headlines perspective? Stock futures fall a second day on the fears that the Fed will tip the economy into a recession. Remember in last night's video, that's kind of what we talked about. Now that we're through the Fed, it's not really the Fed, it's the earnings recession. It's the earnings recession that's possibly around the corner. Q4 will be very, very telling. Q4 earnings, if Q4 earnings scare away investors for holding through 2023, it's probably not a good look for 2023. Maybe some more pain to come, right? Something to consider. What else do we see up here? Musk, right? Selling verified now through filings a bunch of Tesla stock. That's somewhat of a bullish sign if you're trying to find Tesla bottoms, right? Just now we know that this pressure is not just everybody running for the hills. It's Elon Musk dumping some stuff so he can fund other things, probably Twitter. There was some debacle about him not paying Twitter rent. So, again, now that the selling is supposedly, quote unquote, done, at least momentarily, we're talking about a day-to-day basis, right? If the selling is done, if he's filed his things and, it's all taken place, maybe there's a little bit of a dead cat bounce. We'll look at the chart specifically, but this is just interesting, right? Bank of England hikes rates by 50 basis points and will continue to respond forcefully if needed. So kind of mirroring what we did here in the States with our 50 basis point rate hike yesterday as well. Cathie Wood, 11.7 mil into Tesla. All right, keep buying it up there, Cathie. We'll see how that works out. Hopefully, if you're into that ARK stuff, you've got to have a pretty long time horizon at this point in time. All right. FTX insider turned on Bankman-Fried before bankruptcy, flagging potential fraud to regulators. Interesting stuff. What else? Buy NEO from Deutsche Bank, right? Predicts shares can rally more than 70% as delivery volumes speed up. Interesting. So an upgrade here on NEO, which is obviously in direct competition to Tesla. So interesting upgrade here. Continuing down. Thank you. We know what the half-point interest rate hike means for us. Continuing, Tesla, biggest movers pre-market, that is Warner Bros. Discovery, Lennar, earnings candidate Lennar, right? That's housing. Discovery, not sure what's up with that, or Warner Bros. Tesla, obviously, with just the whole Musk filings. What else? Recession fears could trigger a lipstick effect on deal activity next year. Interesting. Love that wording. What else? Downgrade to Marriott, right? Says stock valuation looks fair given the softening of the macro environment, which makes sense. We just saw that retail spending was down. Of course, if consumers don't have a lot saved up in the bank, if savings are at an all-time low, and people are taking out tons of credit, travel goes down. Marriott will likely, I don't know that it takes a hit, but as they say here, apparently the valuation looks fair. So it's just not a bullish indication, right? That's been the main tone of this market, actually, over the past couple of days. It's not that we've been overly bearish as we remain in the daily balance area. We'll talk about that momentarily, but it's just not bullish. The market's just not bullish, all right? What else? Bitcoin drops following the Fed decision after topping 18,000 for the first time in over a month. Haven't looked at the Bitcoin charts in quite some time since we stopped doing the Friday episodes. Maybe we'll have a look. Jefferies downgrades Snap, says revenue estimates are too optimistic and its uncertainties loom. So a couple of downgrades out there. Marriott, Snap, and then as we go back higher, remember that there was an upgrade to NEO, which is kind of in direct competition with the Elon Musk selling all of his shares, not all of his shares, but selling some chunks of shares, and Kathy stepping in and buying them. I think the outflows, I saw some numbers on Twitter or something. It's the outflows from Musk were like 3.5, there we go, billion. So Kathy's 11.7 million isn't making much of a dent in that 3.5 billion. So, who knows what'll happen with it. It's really, it always boils back down to the charts. So we'll take a look at those momentarily. Let's have a look at our earnings candidates here today. So after the close yesterday, we got Lennar. We saw that was considered a pre-market mover by CNBC, earnings candidate. And then Adobe is after the close today. So you'll keep an eye on that one if you want to watch earnings stuff. Other than that, really quiet here as we prep for the next earnings cycle, really. So nothing crazy, not all that thrilled about the earnings calendar. Let's take a look at our ES futures. Here we go. This is the bread and butter of the channel. This is the /ES for anyone who may be new to tuning in here. And we've got a 4-hour time frame chart loaded up in the background. But before we dive into that, we've got to see who's in the building this morning. Who do we got hanging out with us on this beautiful Thursday, clear, bright, sunny morning? Nick Farrell's up first in the chat. After that, we've got INF, Nick Leon. May is here, Wesley, Ryan Speed, Mohammed T. Hawk. We've got Surge, Roger Tutt, Davey Infornity. We've got Chloe and Rando. Jay Rose, Johnny Whitaker, DP. We've got Marvin, Matt Rozan, Live Better, Big Stick, Jacob Williams, Tony Ray. Who else is here in the building? Stargazer, Gregory Rulo, Ty. We've got Stevie J. Ike is here. We've got Mudaman, Chris T. Who else? Johnny Davis, The Sandman. Jay Roldan, Tax Services, Johnny Whitaker. We're back to where we were. Alive. Who else? Art of Consuming Knowledge. Green names now. Gregory Rulo, we got you. Alex Dickinson. John Cardozo, nice to see you. We've got Stargazer, Pete and Repeat, got to get him. Harry St. Louis, got to get him. We've got Mickey. We've got Leo. Sharath, J. Hicks, M. Power. Lord Trader. Kevin Weston. Joe G. Sammy Campbell. Sharon J. Ooh, the list keeps going here, guys. Jeffrey Hoyos, Stephen V. Joel Clark, our ex-pro powerlifter. Cool, everybody's here in the building. Again, if you want to shout out, get here early and say something early, and I'll get you in the next stream. But for now, we've got to dive into this ES price action. Some bearish developments taking place, hence the title of today's video. Selling momentum continues. The selling pressure continues here on the ES. So the main concern is that this is a daily balance area. It's even a 4-hour balance area here. We've got the equal highs up at the top of the range. We've got all of these equal lows down towards the bottom of the range, and we're still holding up. We're still inside of the range, but of course we're coming off aggressively from the big CPI gap up all the way back down to the bottom of the range, basically where we started almost a week ago, right? So nothing crazy is going on here. Other than, if you want to count this 100% retracement as crazy, we're still in the balance area. The daily trend is still neutral. It will only flip to being bearish when we produce a lower low and then some sort of lower high to confirm it and we roll over somewhere, right? That would start to give me the feeling of a bear trend developing here. So sellers definitely have the upper hand, right? We've got some selling momentum taking place here. But as we've been making the case for in the past couple of nightly videos, it's short-term momentum traders that are in control. The fact that we had a perfect gap fill reversal, the fact that we went right to the spike base and then reversed off of it here is really, really telling, right? Those are short-term, very nuanced reference points that only, really day traders should be paying attention to, not your large time frame OTF traders. So I find that interesting, and we continue to see that here on the 4-hour time frame chart. So overall, just to keep it very simple, still in a neutral trend here on the 4-hour. We have not yet produced that lower low, so we're neutral until proven otherwise. This could act as a demand area and give us a dead cat bounce. Then, of course, the concern is back on the table for do we produce a lower high and reattempt, or do we move back to the top of the range, right? Remember, whenever we're in the midpoint of a range, we don't have an edge. When we get to the edges, there starts to become opportunity. So now the opportunity, the trick in the market here is figuring out whether or not we want to fade this and see a mean reversion type move, or whether or not the market will break down on momentum. That is our job on today's session. We have to answer that question. Let's take a look at the hourly time frame chart. So if the 4-hour is neutral, the hourly might be able to give us a couple of insights. So we'll look a little bit more closely at some of the cropped in price action. Even if you only wanted to look at this, you could consider this a balance area as well, with equal highs here, equal lows down here. This low is kind of equal as of right now as well. Or you could say, all right, from here to here to here to kind of where we're opening, from here to here to here, we've got a series of lower highs as well as lower lows. So is the hourly bearish, bullish, neutral? I would start to make the argument here that it's probably leaning more bearish. This is the momentum that we've been discussing. The momentum on a smaller time frame like the hourly certainly does strike me as bearish with these lower highs and lower lows. So knowing that, let's take a look at the most recent trend, that segment that we were just counting, right? If I do something like this. And what I want to point out here, right, is if we're trying to be responsible and we're trying to trade this responsibly, remember that when we poke through and make a new lower low, this is not really where our, if we're trying to take advantage of a trend, we don't want to trade the lower low. We want to trade the lower high or the break through the equal low, right? So if we look at the hourly chart, yes, it is in a downtrend, but in terms of how we get involved, would we want to get involved smack on the open here? Maybe not. Maybe not. And, we'll get into this as we get to the 15-minute time frame chart in a second here, but we're opening on a gap down. So would it be reasonable to look for the gap to fade and then try to find a lower high, short the lower high, and then rotate to the bottom of the daily and 4-hour balance? To me, it seems like that is the way that the puzzle could unfold here. That's how the cards may fall. So, hourly chart, right? We're making lower lows. We want to look for a lower high entry, or after that, an equal low breakdown entry. If the market does just continue here, it becomes slightly difficult to trade, and then you would scout for your lower high entry, right? And it may be difficult to find down here. So, with that said, knowing that about the hourly chart, let's go to the 15, and we'll, of course, adjust that overnight low here. But let's talk about gap rules, because we are gapping down, and we know what we just said about the hourly means that maybe we should look for a fade, a mean reversion type move first, and then scout the lower high. So if all the pieces of the puzzle are adding up, let's just walk through it from the top. The 4-hour trend is neutral. The hourly trend is definitely bearish, but we're sitting on a lower low. And really, to get involved in downtrends, this is not where you want to start initiating positions. It's on the lower high, or it's on the equal low, and then getting the breakdown, right? So here and here. Okay, pair that with what we know about the 15-minute time frame and the gap rules. All right, if we're opening here and we fail to take out the overnight low, then we're probably, again, being wise by not trading the lower low, and we're scouting for that lower high or equal low breakdown. So gap rules would tell us if we move through the opening print, we are looking to close the gap and tag up to the prior low of day. When and if we get here, that's where I would say, okay, it's game on. Can we find that lower high for a gap fill reversal, then turn the market around? All right, so that's kind of what the gap rules would tell me. That's what the 4, 1 hour, and 15-minute time frames would tell me as we head into this morning's open. Let's answer the 3 questions here. So question number 1, where are we opening in relationship to the prior day's range? Always, always, always looking at where we are in relationship to the range. So high and low. Obviously, we're opening underneath the prior low of day on that gap that we just pointed out. So for question number 1, we do have a down arrow here today. It's not neutral. It's not balanced. It's imbalanced. There is a little bit of shock and awe here on the open. We're opening on a true gap down. Question number 2, where are we in relationship to the overnight range? Here's the overnight high. Here is the overnight low. We're certainly opening much closer, almost right on the overnight low. So we'll put a down arrow here, but as we know, this actually sets up better risk reward for the long-sided trade, the fade, right? The gap fade, right? Because now we can put a stop loss very close to that overnight low and not really risk a whole lot looking for the target to be the prior low of day. I mean, I don't know about you, but my eyes would say, based on a quick eyeball test, that that's easily a 3-to-1 risk-reward ratio. So the risk-reward is more favorable down here. We've got shock and awe, so I'll put S and A over here for question number 1. Last but certainly not least, question number 3, what is the overnight inventory position? Is there going to be some correction to it? Yeah, it looks pretty darn good here. To calculate this, you just look at where the prior day's settlement is. That's the same thing as saying the closing print. How much time was spent above, how much time was spent below? Almost 100% net short here. Very little time spent above the settling price. So I would say we're probably like 98% net short. 98% net short in the overnight session, which again correlates beautifully to some shock and awe, fading, correcting that overnight inventory in the upward direction. If everybody's net short, sitting down here on the lows with terrible location, and the gap rules play out, that would help build the case for an upswing to tag up to the prior low of day. So the 3 questions have been answered. We know that we're dealing with a gap. Let's quickly walk through the gap rules and the, what would you call it, nuances of the gap rules here for this morning session. Okay, here we are. Gap rule number 1 that we always start with says if we are if we are unable to take out the overnight low, then we look for the long through the open or the counter trade if you're at the top, right? If you're on a gap up, it's the opposite, of course. But then you look for the move through the open to tag up to the prior low of day. So let's unpack that statement because there's a couple of key things that have to happen here, right? We always want to reiterate this with you guys. Number 1 is that we have to fail to take out the overnight low. The gap fade will not be on the table if the market moves under the overnight low and it stays under the overnight low. That would immediately invalidate the gap rules because we did not fail to take out the overnight low, and the sellers do appear to be making strides in the right direction. So that's number 1. Number 2, part of that statement in terms of unpacking. Sure, we've got to fail the overnight low, but if we come back up and we never take out the opening print, there is also no gap fill to be had. We must take out the opening print. Screens must go green, right? From an opening perspective, where we are in relationship to the open, screens must go green for the momentum to start pushing towards that gap close area. This would also be indicative, considering where we're opening in relationship to that overnight low, this would be indicative of shorts with the worst possible trade location starting to get squeezed out of their position, right? If we start ticking higher through that opening print, anyone who's short from right around in here where we're currently trading, remember, it's last in, first out when it comes to these gap fills. Those with the worst trade location are the first to stop out, and those who maybe entered early up here, some other time during the night, they're still comfortable. They're still, they're holding on. So first in, excuse me, is not first out in the case of a gap fill. All right, it's LIFO, not FIFO. So those are the 2 parts of the first statement that we really need to unpack. That must take place. So again, the failure at the overnight low, across through the opening print for the gap fill to start being on the table to the prior low of day. All right. When and if we get to the prior low of day, we are looking for a gap fill reversal, right? The momentum is clearly in the downward direction. If we're looking for that hourly lower high, right, would it be reasonable for the first place for it to happen be right here? Absolutely, strikes me as reasonable. So if we correct the inventory, if we move and tag up to here, to me, this would be an area that makes sense to provide some resistance and possibly offer the gap fill reversal. So prior low of day becomes an inflection point instantly. To add them up, we've got the overnight low, we've got wherever the opening print is, and then we've got the prior low of day. Those are the big 3 numbers. I'll put O here for opening. Oops. That's O. Let's go like this, actually. OP. Not overpowered, not original poster, opening print. All right? Those are the 3 key inflection points that you need to be focused on for the morning session whenever you've got a gap. Could be in any direction. You need to pay attention to those 3 areas. All right. Another indication here for the market before we start thinking about acceptance in the prior day's range. If we only get a partial gap fill and we turn around, I don't want to say at a random point, but somewhere in the midpoint in between the prior low of day and the opening print, if we turn around somewhere in the middle, that's a pretty strong indication that sellers are actually still pressing the momentum in the downward direction, right? Yes, Alex Dickinson, gap rules apply to anything. Could be stocks, could be futures, could be commodities, right? Gap rules apply to everything. So what I was saying is if we get a partial gap fill, about 50%, maybe less than 50%, that's a strong indication that if we take out then the low of day after a partial gap fill, you're probably going to want to look at that as an equal low breakdown. This was your lower high. It's not really ideal because it's so minor. It's so nuanced. It's not a big hourly, right? It's not an hourly big lower high. But if we're getting strong signals that the sellers are strong here and the buyers just don't want anything to do with correcting that inventory, that would be a concerning look. So partial gap fill, carry that forward as being very bearish underneath the low of day, could unlock more downside. All right. So final situation, if we do not reverse off of the prior low of day, if we do not get something that does this and we accept in the prior day's range, right, I would start to think that the short-term momentum type traders who are getting involved through here say, oh goodness, all right, not really ideal. We're at the 4-hour bottom of the balance. Remember, we're neutral there. We're not bearish yet. Could this really send us on a squeeze higher? It's possible the more time we accept inside of the prior low of day. I would not be betting on this as a primary situation. This would not be like at the forefront of my mind on today's session. This is not something that I would say, I'm specifically looking for an entry to take advantage of this type of scenario, but it's something in the back of my mind. It's hanging out somewhere back in the archives, just saying, okay, we've had pretty aggressive shorting activity on the CPI gap up, and then yesterday on FOMC. If those shorts start to tire out, and again, anyone from this area in here, overly aggressive, poor location, we start to get acceptance here, these shorts from yesterday are like, oh goodness, we're back to break even. We never broke the bottom of the range. We're just going to close out at break even. Maybe we start to get a little bit of a squeeze. Again, this scenario is low on the list of possible outcomes, but it is on the list of possible outcomes. Okay? So, with that said, I will quickly sum up my primary objectives for the day, then we'll take the poll and see what YouTube and you guys in the chat seem to think will unfold on today's session. So, whenever we're opening on a gap, and whenever we have that 100% or close to it net short inventory, I'm always looking for this darn price bubble always throws me off. Let's hide that thing. There we go. I am always looking for, as a primary objective on a gap, the gap rules to be in play, and then something like this. All right, so for me, this is situation number 1. Situation number 2 is probably partial gap fill and then continuing in the downward direction because the selling momentum certainly is there. We also got, again, retail numbers, which sort of may be more of an indication of that earnings recession. If company valuations are coming in, retail spending is down. Apologies, 1 second. So primary objective, maybe the market's starting to see some of the flaws, so to speak. And then situation number 3 would probably be something that does this and then this. All right, that squeeze situation is low on the tier list. So primary objective, secondary objective, tertiary objective. These are not the answers that I'm looking for in the poll. I'm just showing you what I think. Now let's see what the chat thinks. So if you're bullish on today's session, gap fill reversal, or excuse me, gap fill fade, I should say, minor pullback off the low of day, and then some acceptance in the prior day's range. Let's see a number 1 in the chat. Bullish in the chat with a number 1 if you think that this could be in store. A little bit more neutral is maybe lower off the open, but back up through the opening print, sideways, staying underneath the prior low of day, close the gap. No real definitive trend happening down here, going sideways, right? That's number 2 in the chat. Number 3 is for the bears. Let's go with straight lower, big lower high underneath the overnight low, underneath the daily bottom of the balance area. That's this area here around 39.60, right? You're thinking that we go to hell in a handbasket, break the daily balance. That's a situation number 3 on today's session. All right, so 1, 2, and 3. Let's see what you think in the chat. If you've got no idea and you're continuing to sort of sideline yourself in this volatile week, that's okay, but we're starting to pass the major volatility. Let's see if we can start to pick up some some tradable situations. But number 4 is if you've got no clue. All right, we'll let that simmer for just a moment here. We'll type in the official YouTube poll, see what's going on from that perspective, and then we'll look at the chat. All right, so what do you think? Question mark, exclamation point, good. It would help if I could spell you. Y-O-U, there we are. Beautiful. Question 1, or response 1 rather, is bullish. Number 2 is our newt. Number 3, let's add some options here. Oops. There we go. 3 is bearish. And number 4, of course, comes in as an ostrich. That's wonderful. I'm sure everybody who is not a part of that decision-making process is probably like, what the heck, ostrich? What is number 4? Like, what is going on with this thing? All right. So, excuse me. Dan, I just discussed what I thought would play out. Number 1, right? That turns into a 2. I'm a 1-2 on today's session. But scrolling up to the top, who did I miss from a green name perspective? We've got Inza. We've got Joel Clark is here again. I think that's where I left off. Raz, good morning. Nice to see you. What else? WT. Siege is in the building. We've got Will Hawkwood. All right, and with that, we're basically right into the responses. INF going to battle a blizzard apparently. Thanks for tuning in. I'm not sure if you already tuned out already, but thank you as always. And then we've got some chat responses. So 2s, couple of 4s, couple of 1s, couple of 3s. Lots of 2s this morning, and then it transitions to lots of 1s. So again, very interesting how this works. Lots of 1s, and then as I move lower and lower through the list, Alexander Lee putting 1 in the chat 6 times, so thanks for that. But lots of 2s and 3s as I move lower through the list. So again, very interesting how this YouTube poll, this YouTube chat works. In the beginning, it's 1s, 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 and 2s. And then about halfway through, it just clear as day flip to 3s here and up here where those 1s. So very split chat as we move lower through the list. So 1s and 3s, lots of 1s and 3s early, but seems that dominating as we move lower through the list. Definitely more 3s than 1s. So, with that said, smash sounds so violent. It is violent. With that said, we're going to continue along, right? We've handled our ES situations, and that's because I start talking about them first. Yeah, I suppose. There's like a recency bias to that, Arthur. So, you're probably right. But anyways, it's always cool how it settles out. The official YouTube poll, the thing that people can click on, is reading 43% bearish. If you didn't vote and you want to know the number, it's 43% bearish as of right now. So we've been through the ES. Let's move on over to the NQs, and we'll do the same thing in terms of figuring out that 4-hour, hourly, and 15-minute objective of the chart. So 4-hour chart. Why is this not cooperating? I'm trying to zoom. There we are. 4-hour chart. What do we see? Here is the original balance. We are accepting back within. Original balance, accepting back within. The minor balance is this right here. Equal low, 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 low. Heading back towards the lows. Not quite all the way there yet. Possibility, not guarantee, of a 4-hour higher low. So, all right. Still kind of neutral here. We've got our equal highs at the top. You could even consider this a higher high from here to here. So, at best, we're kind of neutral. We're not bearish. We're not bullish. On the 4-hour. 4-hour is still, in a neutral state. So we need to drill down. What's the hourly telling us? What's the objective here? All right, well, if we want to see the breakdown of the 4-hour, then remember that the hourly probably wants to offer some sort of lower high for the 4-hour, and then we break the bottom of the range. So if we rally on the hourly, it's not that the 4-hour is, bullish all of a sudden. It's possibly offering some sort of cleaner lower high, which also aligns with, if we crop in on the price action here, if we're in a downtrend, exactly what we just discussed in the ES, right? We've got lower highs in place here. We're probably scouting for the next lower high because we're sitting on a new lower low as of the open, right? So if we open here, we're technically opening on the lower low. We want to look for the lower high, which makes sense from the 4-hour perspective, looking for that lower high. And if we turn around, great. Then the bottom of the balance is in play as a possible breakdown point. That's roughly 11.5K. 11.5K in your NQ. All right, so it's not in play yet, but 11.5K could be on the horizon after an hourly lower high. That's the objective of today's hourly time frame chart. Where can we put in the hourly lower high? Ideally, it's anywhere underneath the value area low, staying far away from the breakdown area over here. That would be a nice lower high. Lower high. So anything underneath the value area low strikes me as still remaining bearish on today's session. Let's take a look at the 15-minute time frame chart and see how else we can navigate this. Of course, the answers will be very similar to what we just discussed in the ES, so we're not going to beat the dead horse entirely. We'll beat it a little bit, but not entirely. And we've got from here to here to here, right, lower highs in place. We're opening on a gap down, opening more towards the midpoint here, not as close to the overnight low anymore. So your risk reward is not as favorable for the fade in the NQ. Notice that you've got about a 50-50, or a 1-to-1, I should say, risk reward ratio in the NQ. So not favorable for the fade here. I would stick to looking at your ES. Let's just quickly go back and make sure that this didn't completely correct as well. Yeah, it didn't. So there's still better risk reward in your ES for the gap fade as opposed to the NQ. So carry that forward. That is important. If you're looking for that long, you probably don't want to do it in the NQ. You probably want to do it in the ES. All right. But anyhow, if we do accept, like let's just say, because this is opening more towards the midpoint, if we accept over the prior low of day, remember that puts into play the possibility of the squeeze situation. The hourly chart could afford a lower high anywhere underneath the value area low. So it might be that we are able to pull off a bullish trade here on a higher low 15-minute above the prior low of day. But remember on the hourly context that you're only looking for it to rotate somewhere in here and then start to roll back over to achieve that hourly lower high. If it doesn't happen, if we blast right through that and there's no stopping at the value area low, then okay, the hourly chart is now flipping neutral. Pair that with a 4-hour neutral, and now we're like, okay, we're back in the midpoint of the range, right? Let's do something like this. Back to the 4-hour, right? Let's zoom in on this thing. This is important. We're out of this market has been very difficult to trade from a trending perspective over the past couple of days, right? Wild, 100% swings, right? Nothing seems to have any holding power in terms of developing a trend through this most recent balance area. So what I was saying is if we do rotate up, if the bulls do push it into the value area low, remember that just puts us smack in the midpoint again of the balance area. So if you don't grab it long here for the retracement higher, or let's say you do grab it long for the retracement higher, but you're all out at the value area low, right? We're just back at the midpoint of the range. There's not a whole ton of edge here. The edge was down here for the long. The edge will be up here for the possible short or the possible breakout. Or if the 4-hour wants to roll over and give us that opportune lower high here at the midpoint of the range, then fine. The edge will be back down at the bottom for a breakdown when and if the 4-hour shows us a big lower high. All right, so important stuff in terms of dissecting a trend and figuring out what the market's trying to do. The 4-hour objective still remains neutral. Maybe we're looking for a lower high. Does that make sense from the hourly? Yes, it makes sense from the hourly. We're opening on a lower low. You don't want to short here. You want to find the lower high. Okay, so for 2 charts, 2 time frames, we're looking for the lower high. What does that mean? The market probably needs to rally first before we can become bearish. Needs to rally first before we can become bearish. The risk reward is more favorable down here for long-sided trades. Okay, so yes, the momentum is down. The momentum is down, but to trade this, we need some indication of a lower high. If the market continues lower here and it just blatantly disregards, what it's trying to figure out, I think it's difficult to play the short side. Maybe, as I said on the 15 ES, right? Let's just go back to the 15-minute ES for a moment. Maybe if we just, partial gap fill, roll over through the low of day, maybe there's a short there with a stop over the high of day. But remember, you're entering on the hourly lower low. You don't really have the best higher time frame trade location. The hourly is kind of, what you want to be looking at for that direction, location, positioning. Where am I in context of the larger overall trends? Not really great entering shorts here at the bottom of the range. So that's my take on the ES and NQ. I think that, things probably favor searching for that lower high. If I'm wrong and we do continue lower, that's fine. Just realize that you need to have some sort of tight intraday setup, probably coming from a 5, maybe a 15-minute time frame chart where you can say, okay, a stop is going to go here. If we start to get a dead cat bounce, I'm just out of this thing because I don't want to get caught up in the possible squeeze. All right, so that's my interpretation, ES, NQ. Let's look at the Russell. This is continuing to be a red flag for our market. 4-hour time frame chart. Clear as day. This one's obvious. This one is obvious. Balance range at the lows. Original area. Support, support. Break and retest, right? Look at what we have now. Here's a balance range. Break, retest, back in on the CPI, right back out. All right, so this is bearish. No doubt about this one. This is bearish on the higher time frame chart. We've already got a lower high on the 4-hour in place. We've got lower lows on the 4-hour in place as well. So bearish in the Russell. This is a red flag, as we've been saying, for our market. This is, indicating less of a risk-on appetite for equities. Looking at let's go hourly. Let's go hourly. What's going on in the hourly chart here? Looking at the hourly segment from here to here, again, lower high already in place. Lower low, lower low. We're opening on the lower low. So yes, this is much more bearish on the higher time frames. If you were trying to push something and enter on a lower low, you would probably want to do it on the Russell. It doesn't mean it's a better, it's not a better tactic to be entering on lower lows. I would always argue that that's kind of chasing. But if you are going to do it, you want to do it where there's already weakness on the higher time frame charts. It would be the Russell, right? It would not be the ES. It would not be the NQ. It would be the Russell. So I still think that it wants to find a lower high and then continue, right? And that would mean a little bit of upside that pairs nicely with the gap fill rules that we're always looking at. And by the way, the gap rules are in play on the NQ, right? Just because we didn't cover them doesn't mean they're not in play. Gap rules are in play on the NQ. We didn't want to beat the dead horse, right? So Russell, same idea, something that does this, looking for the lower high, willing to probably look for a stronger short against the prior low of day, or partial gap fill, willing to look, harder at a short in there. Or just overall taking that as bearish tone and saying, all right, ESNQ, like we're not favoring that squeeze type scenario if the Russell only puts in a partial gap fill. All right, so here's just a side by side. Let's say that the ES does this, all right, and this is overnight low. This is the opening print, and this is your YLOD, prior low of day. All right, so this is the ES. Make pretend ES up here. I'm just talking about this because it's important to think about divergence, okay? If the ES is accepting over the prior low of day inside the prior day's range, but the Russell gives us a partial gap fill and is threatening a breakdown of the overnight low, are you going to be aggressive here looking for the massive squeeze in the ES? The answer should be a resounding no. Okay? Think about the divergence between the Russell. This has been acting as a leader. You need to have it on your radar. I'm concerned with what small caps are telling us. Okay? So, that is that for the broad market. Let's take a brief look at our, if we go here, pre-market charts. SPY, equivalent cash ETFs, right? What do we see here? SPY daily chart. If you didn't watch last night's video, go and watch last night's video. And I mean, we talk about things in those nightly recaps, the midweek market update, that I think are pretty valuable in terms of understanding how charts and markets and trends are trying to work. Same thing as the ES, right? We've got our big lows. We've got our two equal highs at the top. We're threatening that 394.50, which we know is the lower end of the balance area. We've technically got some sloppier lows underneath. Don't get me wrong. It's not just going to be a pure break of that number, but it's going to give us the heads up. Why do I say it's going to give us the heads up? Let's actually go to an hourly with the extended hours off, right? I'm telling you it's going to give us the heads up because in the most recent exchange around this 394.50, right? Look at this. Boom, 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 failure, right? So 394.50 is the zone. Underneath, the more time we spend underneath, of course you're going to favor more of the bearish outcomes. That lower high situation will be more favorable if we can recapture and get above 394.50 intraday in the SPY. Okay, so 394.50. I would say that if you're looking for the true breakdown, if you want the true move lower in the SPY, you probably want to see it violate like 392. 392 in here, which would be underneath the little balance and the lows, the two equal lows roughly from right here last week's session. All right, I know that's probably not what you want to hear. You're like, oh, I just want to short it instantly underneath 394.50. Yes, bears have an edge under 394.50. You're probably getting much more of like a bear flag consolidation look. But remember, we could just do something like this, right? It's not bearish until it's actually bearish with a lower low. We need a lower low on that SPY daily. So really, really focusing on how we resolve the 394.50. Most recent exchange has told us to watch it, here and here, acting as prior support. So if we do something like this and get back above, look for that lower high first. If we spend more time underneath, maybe the breakdown could come underneath that 392. Okay. Next up, QQQ. What's going on NASDAQ? Same idea. Balance range. Lows in place. Let's go and look at that. Well, first of all, here's the hourly chart, right? Extended hours off. Same idea with the exchange around 281.25. 281.25. Rejection here. Holds above, pulls into it, and it holds here. 281.25. All right, 281.25. Let's see it on the pre-market chart here. Back to the Qs. We're above it. So, knowing that we're opening above it, again, probably don't look for the aggressive big short quite yet in the QQQ. You need to get underneath 281.25, and you need some price acceptance underneath it as well. So hourly lower highs underneath, or 15-minute consolidation underneath. That might get you bearish for that just, straight breakdown. But I personally think that something like this could be on the store or on the table first for that, hourly lower high that we had just been talking about nonstop in the NQs. All right. So that's what I would think about here. Lower highs anywhere under 288.75, ideal. Next up, IWM Russell 2000 and our small caps. As we just pointed out, this is a concerning look. You can see clear as day on the daily time frame chart. Big lower high already, and spending more time in closing yesterday in this micro balance underneath the major balance from here. So steps in the downward direction. Think about this as just stair steps lower. Big gap down, opening underneath that 178.66, right? So we're opening already underneath on a new lower low. This chart is bearish. This chart is a red flag for our market. As we just pointed out, watch out for that divergence. It may be difficult to pull off a short here considering we're opening on the lower low. So be mindful of a little bit of inventory correction, but any excuse to get short on a lower high or possibly looking for that divergence, and again, just a breakdown here, this is where it would be more reasonable to look for the short through the lower low because all of the higher time frames are already bearish. All right, that's your IWM, and those are the numbers. So 178.66, as long as we're underneath it, bears in total control. If there's a rotation back above, maybe it produces another lower high. You could, what I would look for in that case, right? If we do get, any move above 178.66, then it's just a lower high off of this. Think about it on the daily as a break, retest, lower high, and then back lower. So look to position short against that 181.10. That's what we've got in the rut. All right. Apple, what's going on? Apple is bearish. We talked about this in last night's video. I'm not going to rehash the whole deal. You can go and watch last night's video. Really informative in my opinion. Underneath 140.43, breakdown here. That's where you're looking for the short entries. Could be on tap as soon as this morning with the gap down here. So bearish momentum certainly in play. If we do get a retracement higher, you want to see a lower high off of 143.50. Apple's daily chart, really sloppy. Sure, we've got the lower highs, but look at how, we retest the balance here. We fall out of it. We gap into it. We fall back out of it. The chart is horrendous. The best thing I could tell you about Apple is just that we're underneath a descending 200 SMA. And I would say we really haven't recovered much from this overall move here. Sure, we're in the midpoint of this flag range, but from here to here with all these consecutive now lower highs, bears seemingly have the upper hand. I would, very difficult to play long into these two bars as well, right here, right? Very difficult to play long into those. So I would favor the gap fill trade down underneath us, but I would just be mindful again, everything that we've discussed, I will echo in Apple here. I would be mindful of inventory correction first, and the better positioning for a short may be off of that 143.50. If we do start to move through the gap, I would be willing to just take it here, considering how beat up this chart looks and just how, it's something to consider, right? Break of all these equal lows. There are, sell stops in here, right? People looking to exit longs underneath this obvious support. So to me, this is interesting through the gap. All right, Netflix. Someone said Netflix not doing so hot in the pre-market. Yes, you are right. Netflix is absolutely getting beat up off of this wedge pattern breaking down. Remember that we had been discussing 303 as the point, right? Because that would be your first, big lower low underneath here. So 303 breakdown looks to be in play. One thing I would be mindful of in Netflix is, again, because the gap is so large, gap rules will be in play. So keep in mind gap rules. So looking for a fade first and then a reversal, off of a partial gap fill somewhere around the 50% mark, or all the way up to the prior low of day. That's a little bit much. It's a little extreme, especially given all the volatility that we saw here and here. I'm surprised, that we didn't really move as much. This range is obviously larger than the FOMC volatility and the CPI volatility. All right, so be mindful of that. It may not fill the gap and close it all the way. A partial gap fill would be reasonable to look for a short, right? If it's going to be lower than just price acceptance or any failures to get back over 303, that's kind of your, all right, opening range breakdown, short under the low of day, stop over some sort of intraday structure. That's if we get acceptance underneath 303. All right, so Netflix doesn't look great. It's breaking the wedge. It's breaking this lower low, threatening the lower low, right? Looks more bearish than bullish now. Tesla. We talked about Elon Musk and the filings, right? So, of course, he has been the one causing lots of the selling pressure. You can see it in the volume here as well. It's been in a downtrend for quite some time. If we get a little bit of a reprieve bounce, if people are like, oh, if Elon's done selling, maybe it'll bounce a little bit, then you're watching 155. If we can get back over that, it's the prior low of day. It's this little 2 equal low setup here. It's the prior big weekly resistance top. If we can get over that 155, maybe there's a retracement back into that 170, and that's where you want to position for shorts, right? Break, retest, lower high up here. That's much more attractive. So 155 is the nuanced point. You can see it acting in the pre-market here. If we're underneath 155, we're obviously opening on a gap down. A gap and go here would be pretty detrimental considering how strong this weekly trend is, right? We know that there's not a lot of support until we come all the way into 112. We talked about this in yesterday's morning update, right? 112, a lot of range here. So also, like the flip side of that coin, so here's our coin, right? The flip side of this coin is because there's so much range here, don't feel like you've got to be the first short in the door underneath 155. You don't have to be the first one here to stick your hand in and say, all right, I'm going to try it out. What if there are sharks? What if this is shark-infested water? I'm going to do a terrible drawing of a shark here. Maybe this is a fish. Not bad. This looks much more like a fish, but maybe if we put an aggressive fin on the top, right, and some sharp teeth in here. What if there are sharks down here and maybe a dorsal fin as well, right? If there are sharks down here, you probably don't want to be the first one in the door sticking your hand in. Let the sharks gobble up the shorts who are aggressive, lower high, then we enter. All right, something to consider. All right, enough fun and games. Google up next. I'm not Picasso. I'm not Rembrandt. I'm not Monet. I'm not Manet. I'm none of those guys. I'm not a classical master. All right. Here we go. Google. Big gap down. Big hit to the communication sector. That rotation is not taking place that we needed to see in the S&P sectors. This does strike me as being a bearish data point for our market. Concerned here underneath 94.64. The issue is that we've already looked below on this wick, right? And we failed to get that acceptance back into the range here. So the look below and fail is off the table. But if we look lower, right, we've got a hammer candle that's supported here. We're opening towards the lows around, 93.10 in this area, right? So overall, we're stuck between a rock and a hard place. Rallies should be met with resistance off of 94.64. And if we just move lower first, you probably don't want to short through this lower gap instantly. You would want to watch for the dead cat bounce, lower high, and then the look through the gap, okay? So caught between a rock and a hard place, the rock being 94.64, the top of this overhead supply balance, and the hard place being the difficulty of wanting to trade through this gap on the downside, but recognizing that, hey, we already saw a lower wick here. Maybe there's some buyers hanging out. Maybe we get a bounce off of that gap again. That's exactly what happened here. Just, hard place. Rock, hard place. Be careful around those two areas. I think that you would want to be patient for a reaction around one of the levels to do something. Right? You would look for the lower high here, or you would look for maybe a quick dead cat bounce, lower high, and then short through. So you want to see a reaction at the rock or the hard place first before getting involved. Next up is Meta. What's going on with Zuckerberg's fantasy land here this morning, giving us what looks to be more of a threat to a breakdown of the 2-day range as opposed to a breakout. We talked about this in last night's video. You want to watch your highs, you want to watch your lows. The lows look to be threatened right now, so underneath 118.50, gap close underneath us is tradable. We're opening in the 2-day balance up here on a slight gap down from the prior day's session, so maybe a little bit of just sideways activity here. As long as it doesn't get upward lift soon, you would watch for your breakdown. If it just instantly breaks, you're looking for shorts on lower highs to take us through the gap close. All right, so that's Meta. Next up is NVIDIA. Gapping down here this morning, but still above our level at 168.50. So be mindful of inventory correction. Move higher here first in NVIDIA because the daily trend is so strong. I imagine that people are trying to pick this up, or I would think that people would want to pick this up, I should say that I would imagine that there would be demand for NVIDIA shares anywhere above this breakout point on the pullback, trying to find that higher low. So as long as we're over 168.50, still would favor bullish outcomes in NVIDIA, not looking for big breakdowns here. Concerned about breakdowns under with acceptance, so that would look like lower highs, right? With this, right, concerning underneath 168.50, but currently that's far from the look. We're still opening well above that level here. All right, Microsoft. What's going on with Softy? Really ugly chart. Inside bar setup here, opening on a not quite a gap down, right at the lows of the prior day's session. So I would say based on the daily pattern, right, inside bar breakdown, sure, definitely in store underneath an inverted hammer low as an inside bar. Your target would be the 250.75. All right, so some reasonable downside available here in Microsoft for something to come into 250.75. Big retest of this area in here. When and if we get there, you might get a reversal off of it. So don't overstay your welcome in Microsoft short side, but the daily pattern, the inside bar inverted hammer, does strike me as being reasonable to play downward. Next up is Amazon. Last but not least, the mini beast, and then we're out of here. What do we see on the screens in front of us? Nothing but chop. Nothing but chop. This is a really ugly chart. We talked about it last night. Here's a balance range. Look below and fail, but it was a gap to the top of the range, and then we faded right off to the bottom. Technically, we printed a little bit of a lower wick there, a hammer-esque type candle yesterday. We're opening at those lows underneath the 90.57, back in this consolidation and congestion. Really, really difficult to pick out, what Amazon wants to do. I think the most tradable thing for today's session would be like a higher low above 90.57, a failed breakdown of the range. Maybe it rotates back higher into the midpoint, 93-ish here. That would be like, I would think that might be something that could be identifiable based on the higher low, but, in this zone, not really great for shorts just yet. Not really great for shorts just yet. As I said in the video last night, just underneath 86, give us the clean range. Give us the clean range to trade for, all right? That is the core list of companies, and that's going to do it for our pre-market prep. Let's take a quick look at the dollar. Someone's asking about the dollar. Dollar has weird, we went DXY. Dollar has weird hours, right? It opens early, like oil, which we were discussing yesterday, an hour early. So it's lower off the open. So technically this, the typical relationship is that this is bullish for equities, but remember that if this continues lower, it's a sign that inflation is coming in, and maybe equities should be bullish, but it's also a sign that the Fed may have to step in early and come in for a quote unquote save the day type look. So not great for the dollar and equities to be going down at the same time. It's much more of it's a sign of an issue, right? This is a sign of an issue when dollar is coming in and the market's coming in, both of them at the same time. So that's what I'd say about the dollar. All right, we've got 15 seconds to go until we've got 9:25 on the clock, so we're basically out of here. TLT showing strength. Yeah, we'll take a quick look at the TLT. A little bit higher here in the pre-market. Yeah, this is much more of a classic quote-unquote flight to safety look. This would be risky. This would be risk off for equities, bearish for your S&P. All right. We'll wrap it up at that. It's 9:25. I'm out of here. We're going to prep for the gap rules. Has anything really changed in the ES? This will be the last look, and then I promise I'm going to stick to my word and get out of here. Quick look at the ES with us one last time. Nothing's really changed here. This is still looking attractive for everything we've discussed earlier, opening so close to that overnight low. So with that being said, join the Discord if you're not in there already. I greatly appreciate every single one of you guys coming out to the stream. Hope to chat with you guys in the Discord, and we'll see you in the next one. All right? Stay green out there, everybody. And we'll catch you tomorrow.